Hey guys, welcome to another episode of The Dana Show. In this episode, I want to cover some stuff about Walmart, a company that I currently am invested in, and had some interesting news come out recently with their earnings transcript, which caused their stock to fall about 7%. Disclaimer, I'm still not a financial advisor. This is purely my opinions based on what I read on the internet and what I get from it, and pretty much these are just my thoughts. I hope you enjoy and don't take any of this as financial advice. So let's get on with it. So if you're the one person that hasn't heard about Walmart yet, it is the largest retailer in the world. They have over 11,000 stores in 27 countries. Sorry, I'm looking down, but I'm gonna highlight stuff on my iPad and read stuff, but they are the world's largest company by revenue. So in 2019, they revenued over $500 billion, which is kind of crazy. And they are the largest private employer with 2.2 million employees. So basically, it's a large company. So now some brief overviews about the charts. For the past 5 days, the reason I was very interested in potentially buying more of Walmart is because if you'll notice here, it dropped around 6 or 7% after earnings came out, which I'll cover in a little bit. If we look at the past year, it's been general steady upward growth. The past 5 years has been even more general steady upward growth. And since its inception, it has multiplied many times in price. It started at 25 cents a share in 1981 and kind of did a whole lot of nothing from around 2000 to 2011 and sort of started taking off in 2015. So recently, Walmart had a pretty big sell-off. This sell-off essentially wiped $25 billion. Oops, did not mean to cross it out, meant to highlight it. Wiped out about $25 billion of value from the retailer's stock. The reason it dropped is because Walmart missed earnings per share estimates, and they're planning to invest $14 billion into the company, which I think is a good thing, and I'll cover in a bit, but apparently investors thought it was a bad thing. And quick note, they plan to invest the $14 billion to ramp up automation, improve supply chain, and add new customer services, all of which I think are really great things and are going to help Walmart expand into this sort of new age of more e-commerce and more technology. And they did have a very successful 2020, so instead of sort of keeping it as cash, they're using it to invest in themselves and make their competitive advantage even stronger, which I really like. I like companies that have a competitive advantage in their space and are going to be very hard to compete against, which is just the same thing in more words. So their earnings call was on February 18th, I believe. I don't listen to them, I read them afterwards because people talk really slowly, but whatever. And I highlighted a few things that I thought were really interesting. They completed the previous year with record sales, which obviously is really good. I'm just gonna point because this is a very large number, very important. Over $500 billion, and they're improving their e-commerce margins, which is really important. I think the future of Walmart is expanding more into the e-commerce space and sort of competing with what Amazon and Amazon Prime does. And just some numbers, they grew around 8.6% in sales and 79% in e-commerce in 2020, which is pretty great, especially for such a large company. And one of their subsidiaries, Sam's Club, by itself actually would be top 50 in the Fortune 500. So even a company that is a subsidiary of Walmart is really, really large. That just sort of speaks to how large Walmart is. And one thing I also like about Walmart is that they're expanding to regions outside of the United States because Walmart and retail and e-commerce are already so big in the United States. They are almost guaranteed to see more growth in other countries that have expanding e-commerce. So for example, in India, Mexico, and Canada, they had 60% e-commerce growth. And a few reasons why the earnings per share this year was lower was because of the COVID-related costs. Of course, Walmart has to hire more employees as there's more demand for items in their stores, and they have to make sure their stores are as clean as possible to help prevent the spread of everything that caused 2020. And interesting, there was a $220 million decision to pay back some UK property taxes. The reason these numbers are important is that their adjusted earnings per share came out to $1.39. I keep crossing stuff out instead of underlining it. $1.39 versus the $1.51 that was expected. However, their earnings per share would have been around 37 cents higher if not for the $1 billion COVID costs and the $220 million UK property tax costs. And if you add this to $1.39, you get a 1.79 earnings per share, which would have actually beaten the estimates by about 25 cents a share, which is really good. And again, they're just reiterating that they're focusing on growing in other markets such as e-commerce, United States, Mexico, and India. And here's kind of where they talk about what they're going to do with the $14 billion that I showed in the article earlier. Their revenue did grow $40 billion last year, so instead of sitting on it or doing share repurchasing or whatever, they are investing into themselves essentially, into fulfillment capacity, supply chain, automation, and technology. And these are all really modern things that I think will help push Walmart more into the e-commerce space and grow more in other countries. And just touching back again to the other countries part, in India, they own stakes in Flipkart and PhonePe or PhonePe, I'm not sure, but it's really nice to see them expanding into other countries. And here's where they mention that they plan to spend around $14 billion this year, essentially investing in themselves. This earning call kind of goes on. I'm not going to touch on the rest of it, but these were what I thought were the most important points from the beginning. So another reason I originally was interested in Walmart, I don't remember when I got into Walmart, but it was long before this earnings call, was because they are a very strong dividend company. For example, their current payout ratio is about 40%, and they've been growing their dividend year over year for 48 years. So if you don't know what a dividend is essentially sometimes companies make a lot of money, and instead of reinvesting all of it to themselves, they reward shareholders and investors by paying you in the form of a dividend. And if you take a look at the dividend growth chart, this kind of is a beautiful chart. It's just been steadily increasing year over year since 1990. One other brief thing I want to touch on is something I look for in companies. It's called the PE ratio, which is price to earnings ratio. So the price of the company versus how much they earn. So for example, if a company has a PE ratio of 1, that means that if the company is worth $100 billion, they earn $100 billion in earnings. And generally, you want the PE ratio to be lower, because if it's really high, it either means that the company is very, very expensive versus what they earn, or that their earnings are very, very low compared to the price of the company. Some interesting stuff happened with Walmart in 2017 to 2019, where the PE ratio spiked up to, I think this is around 50 here. I did not mean to do that, but like somewhere around 50 here, which is kind of high, and the past few years has kind of been coming down to an area that it was at before. And I kind of like Walmart back at this area because it's a relatively lower and more steady PE ratio. Although if you want some examples of really, really high PE ratio companies, the first one that comes to mind is Tesla. I think the PE ratio is like over 1,000. So that's kind of a crazy difference between that and like something like Walmart, which is around 20 right now for PE ratio, which I think is pretty good. One other thing I like to look at when I invest in companies is who are they competing against and how can they beat their competitors. So in my opinion, Walmart's largest competitors are Amazon and Target. Walmart competes against Amazon's retail portion. Obviously, Amazon is a ginormous company, especially in the cloud computing space with AWS, and I don't think in any way Walmart is trying or will ever compete with them. Actually, it'd be really interesting to see Walmart try to become a cloud computing giant, but that's beside the point. I think Walmart Plus, which is kind of like Amazon's Amazon Prime, are competitors. Walmart Plus is a little bit cheaper than Prime, and Amazon Prime, you also get Prime Video, but I have Prime because I have the student discount and I never watch anything on Amazon Prime Video, so I don't really know how useful that is. But the reason I think Walmart has an advantage over Amazon's like retail delivery space is because Walmart is so big. They have so many stores. I believe the statistic is something like 90% of Americans live within 10 minutes of a Walmart. And because these retail stores basically have a ton of inventory, every single retail store can act as a distribution warehouse. So if you wanted to order something and there happened to be a Walmart 5 minutes away from you, you theoretically could get that like within 5 minutes. Whereas there are much fewer Amazon warehouses, and Amazon is able to have such quick delivery because their shipping infrastructure is so advanced. But Walmart has the sheer number advantage, in my opinion, and if they're able to more optimize their shipping structure, they could almost guarantee like a couple hour delivery for pretty much 90% of Americans, which is kind of incredible. Similarly, against Target is just a smaller company than Walmart, so they don't have as many stores that can essentially act as distribution warehouses. So basically, the advantage I think that Walmart has against their competitors, namely Amazon and Target, is that Walmart, if they optimize everything correctly, can have much better last leg delivery because there are so many warehouses that they can deliver from. Another thing I really like is their leadership. Their current CEO, Doug McMillon, may mispronounced that, apologies, but I think he became CEO around 2014, and if we'll go back to the stock charts, he became CEO around this time and sort of brought Walmart out of this slump where it didn't move for a bunch of years. But some things that I like that the leadership has done is that in 2015, they raised the minimum wage for all their workers. This caused the stock to plummet, I guess because investors thought that instead of returning value to the investors and the shareholders, they were giving value to the associates instead. But I think by keeping their associates happy and increasing their wages and benefits, it makes them more productive workers, which in return grows Walmart, which in return can grow benefits for the investors and shareholders. And since then, the stock has about tripled. Another thing Walmart has been doing relatively recently that I really like is they're really trying to expand into the e-commerce space. So for example, in 2016, they acquired Jet.com, which has really helped beef up their e-commerce business. Similarly, in India, they have a stake in Flipkart, which is India's leading e-commerce business. And again, in China, they have a 5% stake in JD.com, which is China's biggest direct online retailer. So in conclusion, I really like Walmart, not because I think it's going to 10 times anytime soon, because if they 10 times their revenue, that would be $5 trillion a year, which is kind of ridiculous. I'm investing in Walmart because I like the company. They have a great dividend history. I really like their leadership. I think they're investing into themselves, into their associates, so that they can provide more value for investors and shareholders. And I think Walmart is in a unique position that they can compete against other companies like Amazon and Target due to the sheer number of retail spaces that they have that can act as distribution warehouses. And if they take advantage of this, which I really think they can with Walmart Plus, it'll really improve the last leg delivery and really allow them to get an edge against things like Amazon Prime and Target deliveries. So that was just some of my own opinions. Again, not financial advice. Please let me know what you think, and I'll see you guys next time.